Ladies and gentlemen, dear guests, let me extend you a very warm welcome at the House of Europe tonight and the presentation of this book, Safeguarding the Euro in Times of Crisis, the Inside Story of the ESM. I would like to excuse the head of representation, Ms. Bacchus, who unfortunately cannot be there tonight with us. And on the same occasion, I would like to warmly thank our friends from Europa Union Luxemburg, who have approached us with the idea of organizing this joint event specifically. Great thanks to Manuel Schöp and Alexander Den Reuter. We have been observing that events dedicated to economic and monetary governance do attract interest of the public, and that's the case tonight as well. The book will be presented tonight by Charmian, Esther, and Wolfgang from the European Stability Mechanism. Let me briefly introduce them to you. Ms. Esther has been the principal editor at the European Stability Mechanism. She previously worked in editing and journalism at organizations such as Organization for Security and Cooperation in Europe, the European Union Agency for Fundamental Rights, or Reuters news agency. And we have had the pleasure of welcoming Mr. Preussel at the House of Europe before. Last March, he was presenting ESM at an event that we organized as part of a series called Let's Talk Europe in the run-up to European elections. Mr. Preussel has been the head of communication and chief spokesperson for the ESM since the year of its creation, 2012. Previously, he worked as chief correspondent, bureau chief, and foreign editor for Financial Times, and the economic correspondent for Die Zeit from Paris. They will play a dialogue presenting the book, and after that dialogue we will open a Q&A session during which you, the audience, will be given the opportunity to ask questions. And the role of the moderator has been kindly assumed by Mr. Schöp from Europa Union. Thank you all for being with us tonight. By the way, the scope of the book, which is the theme of this event, is quite impressive. It has over 400 pages, and reading the titles of some of its chapters resembles the script of an action movie. I'll give you a few examples. Enlisting Klaus Regling, I have his number. Or European Bazooka, the $1 trillion question. And the quick ones among you who have not got hold of one copy of the book will have an opportunity to do so after the event tonight. And great thanks to the European Stability Mechanism that has provided us with some 50 copies of the book. I do not want my introduction to overlap too much with what is going to be said about the book, but I would like to say in few words in which context the ESM operates. We all remember the 2008-2009 financial turmoil that soon morphed into a major crisis. Subprime mortgages from US, contagion from toxic derivatives that spilled over to banks worldwide, including in Europe. I myself, back in 2008, was in my first months at the European Commission, so I could observe from the first row, so to speak, how the Commission was working on rules of recapitalizations, bail-ins of banks that would be compatible with state aid rules. And soon after, it started redeploying staff internally to reinforce those teams that were to find a political response to the crisis. And one of the results of that effort was the Europe 2020 strategy, and I felt very proud then to be part of that effort. And I said, no matter what some of people may say, you know, the Commission does deliver, and it does deliver quite quickly. But back to the difficult conditions on financial markets. We remember that back in 2010, some countries suddenly had difficulties to borrow on affordable terms, and a series of difficult political, economic, constitutional, and judicial decisions had to be taken in order to prevent further damage. And the result of some of those decisions was the establishment of the European Financial Stability Facility back in June 2010. The facility is a private company established under Luxembourg law. It was designed as a temporary solution that was part of the EU strategy to safeguard financial stability of the euro area. It was equipped with guarantee commitments from EU member states that were supposed to be used in lending to countries. This facility is still operational. It issues bonds, but it cannot make new loans. And then in October 2012, the European Stability Mechanism was born as a permanent institution under international law on the basis of an intergovernmental treaty. Its mission has been to assist euro area countries that would no longer be able to borrow on capital markets. And its goal has been, therefore, to help safeguard the financial stability of the euro area as a whole. ESM and the European Financial Stability Facility are separate entities, but they share the same staff and the same locations here in Luxembourg, Kirchberg. And so far, they have assisted 5 countries, specifically Cyprus, Greece, Ireland, Spain, and Portugal, and they have helped to recapitalize the Spanish banking sector. And in this context, it may be useful to say that ESM and the European Financial Stability Facility are not the only vehicle or structure through which financial assistance to countries in need is provided. So financial assistance can be, for instance, granted on bilateral basis by individual member states or by the International Monetary Fund. Non-Euro area countries can turn to the Commission and Council for balance of payments assistance. Non-EU countries can receive macro-financial assistance if they receive difficulties in the balance of payments. And it's useful to see that the architecture through which financial assistance is channeled is more complex than that, and obviously each player, be it the European Commission, be it ESM, be it the European Central Bank, need to coordinate very precisely. And what must be highlighted when talking about ESM is that through its interventions, it has played a role in keeping the euro together. The euro, the 20th anniversary of which we were marking last year. Let me also say that the European Stability Mechanism is about to be reformed. There is a consensus that ESM is to play a bigger role in financial assistance programs. Among others, it should be enabled to provide credit lines to the Single Resolution Fund, which is a fund that was established to help in case a bank were failing. And in the event that Single Resolution Fund should be depleted, ESM should be enabled to quickly provide a revolving credit line, something that we call, in our technical jargon, common backstop. And this all is not supposed to be a purpose in itself, but it is designed to serve the aim of completing the banking union and deepening the economic and monetary union, which are also cited as part of the priority economy that works for people. One of the 6 priorities that have been set by the new President of the European Commission, Ursula von der Leyen. We expect a final agreement on changes to the treaty establishing ESM to be reached by March this year, so that the ratification process in the 19 euro area member states can start then. And before becoming too technical, I would like to stop here and invite our dear guests, Charmian, Esther and Wolfgang Preussel, to convince you that the history of the European Stability Mechanism is anything but dry. The floor is yours.
Thank you very much for this very kind introduction, and obviously also thank you very much to the European Commission for hosting us here at the Maison de l'Europe for this book presentation. And also thank you very much to the Europa Union Luxemburg for initiating and organizing this event. As our host, Dagmar has said, my colleague's name is Charmian Ezra. My name is Wolfgang Preussel. We will, in a little dialogue, walk you through the book, perhaps also give you some insights on the production of the book. It wasn't as straightforward as it may look like when you see the final product in your hands or on your table. And we will also talk a little bit about how the book came about, the interviews, and how it was then compiled into the book that you see in front of you. Obviously, the probably most important part is we are here also to answer all of your questions that you may have on the ESM, on the book, and on our activities. I will now hand over to my colleague, who will give you a brief introduction into the book. I mean, she's really the person to talk about this with authority, because she was the editor. She has worked on that book for 3 years. I think it's fair to say without her, the book wouldn't exist. And so nobody is better placed than Charmian to give you that overview. Charmian.
Sure. So just a general overview. The book essentially chronicles the evolution of the Euro area crisis fund from what was at the beginning basically an ATM, a bancomat that spit out cash, to a fully fledged international institution embedded in the Euro area architecture. And we decided to do that by interviewing some of the area's top policymakers, central bankers, senior IMF and Commission officials like Christine Lagarde, Wolfgang Schäuble, Mario Draghi, and Jean-Claude Juncker. We also talked to many of our staff who were able to talk to us about the beginning and of our organization, and also about their personal experiences in dealing with the crisis. Our purpose in writing this book was twofold. First, we wanted to capture the voices of the people who had been at the negotiations. We had the advantage that the history is not old. Therefore, all the people were still around, many of the people were still active, and they all had quite vivid memories of the crisis. And the second reason was we wanted to also put a narrative on the table, our narrative, that showed the blend of the different views and how they came together to find a middle ground to resolve the crisis. So now I'll pass back to Wolfgang, and he'll give a bit more in-depth on the organization itself.
Yes, thank you. So what I thought I'd do is, and I won't be on that very long, but I thought it's perhaps interesting to give you a little bit of an oversight of what the ESM is, what it is doing. And I would like to start with introducing you to this map. You know it, obviously, this is the Euro area. To invite you to do a little counterfactual would be to imagine if the EFSF, the ESM, and also the other related important actors such as the European Commission, the IMF, and the ECB had not existed, had not undertaken the financial assistance support programs to the countries who had come into difficulties in the years following 2009, 2010, what the Euro area would look like. And if you look on the map on the right-hand side, I think it's fair to say that we might today see a Euro area that does not contain a number of countries which are part of the euro area and which we believe should be part of the euro area. So I think that's a way to illustrate that the undertaking that was done in the past years was worth it, was difficult politically, economically, socially in the countries, but led to results that really kept the euro area and perhaps also Europe together. This obviously wasn't only the job, as I already mentioned, of the ESM. There were also in the member states very important reforms that had to be undertaken, some of them very painful, in order to get these countries back to a situation where they were able to have sustainable economies, where they were able to go back to the markets to convince investors that their economies would be sustainable again and that they would be worthy borrowers, but with the help of the loans provided by the ESM and the reform conditions that were always attached to that, they were able to do that, and we were able to maintain the euro area as it is. This is a very short overview of what we have done, what basically characterizes us. The EFSF and the ESM have a combined lending capacity of 700 billion euro. Since 2011, we have disbursed 295 billion in loans to the 5 countries. That's a significant amount of money, as you no doubt agree with me. These are not loans that just went there and there was nothing else. They were always attached to quite a tough conditionality with the aim of addressing the root causes of the problems that led the countries into the difficulties they were in. Normally, the programs lasted for 3 years. In the case of Greece, and we can talk about that later if you're interested, it lasted 8 years, lasted much longer because the problems are much deeper rooted. But in the end, the countries then were able to leave the programs on time and are since back on the market financing themselves, and in basically all cases also showing quite impressive results in terms of growth and economic well-being. Basically the business model, if you want to call it like that, is that the ESM, as a result of its very good ratings it has, can finance itself very cheaply on the markets. We get the money that we use in order to disperse the loans. We get that from the markets by issuing bonds very regularly, and we can do so at extremely low interest rates, which we then pass on to the countries who then benefit from our loans. This is something that does not generate any direct cost. It's not taxpayers' money. That's a misconception that is very often around, that we are basically transferring taxpayers' money. And the cheap loans that we can then afford to the countries that receive our loans help them to gain budgetary breathing space, which helps them to get back into shape again. Here you have an overview over the 6 programs, 5 countries, but 6 programs, because Greece received a major part of its loan by the EFSF, the first basically rescue fund that was set up in 2010, and then another part of the loan was done in 2015 via the ESM, and the 4 other countries, Cyprus, Portugal, Ireland, and Spain. The total, as I already mentioned, is almost 300 billion euros. I talked about what I called a little bit laconically business model. Here you have, I think, a quite telling illustration. So by providing the loans at these very, very low costs to the beneficiary member states like Greece and the others, we give them money that is much, much cheaper than it would be if they had to go to the markets themselves and borrow it themselves. And in the case of Greece, this sum, obviously because the amount of loans is so large, is particularly important. So we, for our annual report, calculate every year the amount of money that Greece and the other countries save in their budgets as a result of the very favorable lending terms that we can offer. In the case of Greece, it's 13 billion for 2018. We will have a new number in our annual report that we'll publish in June. This year, it's 13 billion, and that's the equivalent to 7% of Greek GDP. So it's really sizable. I already mentioned this, so I won't spend a lot of time on this. We generate the money for the loans and also to refinance the loans by going to the markets regularly. You can see that in the peak time of the crisis in 2012, 13, and 14, we issued up until more than 65 billion per year. The amount has gone down because we no longer disperse new loans. We only have to refinance the existing loans. So at the moment, the combined funding for the two entities, EFSF and ESM, is a little bit more than 30 billion euro. Dagmar already talked about the ongoing work. So there is the ESM treaty and the negotiations about reforming it. They have come to basically an agreement in principle among the 19 member states. There were political difficulties in Italy for the government to agree to the final agreement, which would then have led to ratification in the 19 member states. But we expect this to happen very soon, as you mentioned. So the items, I will not go through them in detail because you already explained them, are here. It's important to state that this is an effort that is not a goal in itself. A stronger ESM is not something that in itself is a worthwhile goal. This is part and parcel of the efforts within the European Union and the Euro area to make EMU, Economic and Monetary Union, more resilient, more resistant and stronger. And this is one part of it that goes together with the other important streams of work like a European deposit insurance, the budgetary instrument for convergence and competitiveness, and the ongoing work for the capital market union. And I will now hand back to Charmian, who will talk a little bit about how this book is different from other crises and institutional histories.
Yes, I think there's three particular aspects of this book that set it apart from the typical crisis book. One is it does focus on the virtues of the crisis, and we point out that the policymakers at the table did make a number of innovations, increasingly targeted, increasingly sophisticated solutions to the problems that they were faced with, so that the euro at the end of the crisis came out with a much more robust financial structure and in much more robust form itself. Another point is that this is the story of the possible. As Robert Schuman in his declaration said, Europe won't be made in a day. And certainly the EFSF, when it came to be, was weak, it was temporary, it was complex and hard to understand. And one of the quotes that actually didn't make the book was from one of the architects of the EFSF, and he said, that's the worst possible setup for an institution. And indeed, it laid the groundwork, however, for the ESM, which is based on an international treaty, is not temporary, and has a strong 80 billion in paid-in capital to help it. But it was what was achievable at the time, that temporary structure. And then I think most importantly, this book is the story of consensus. This is the story of initially 17 countries and finally 19 countries finding a way to come together with a crisis beating down their door to find an approach that would work, that would resolve the crisis. Klaus often says that we have now 19 members, and we can't say that half our members are right and half our members are wrong. What's important to us is the coming together, and that's the ethos of the ESM and also the ethos of this book. So I'll pass back to Wolfgang to talk about one of the aspects of the book that's particularly unusual, which is all the interviews that we conducted. Wolfgang himself conducted a number of these interviews, and he can give us a bit of a flavor of what that was like.
Right. As Charmian mentioned earlier, if you look at the ESM, when we started to do this, the ESM was about to become 5 years old. So you might ask yourself, a 5-year-old institution, is it really necessary to write a history book on that? we thought the compelling point for writing a history book about a very young institution as ours was basically twofold. One reason was that our history, starting in 2010, going until when we published last year, was basically perfectly intertwined and running in parallel to the history of the financial crisis. So you could, in a way, tell the institutional history simultaneously as you also told the history of the financial crisis. And the other reason was that everybody who was involved, all the founding fathers and mothers and the other contributors to the institution, were, first of all, most importantly, still alive. Most of them were still in office and were all still at reach for us. So what we decided to do, contrary to some initial ideas, was to basically write something based on interviews, based on going to the people who had set up the institution, the finance ministers, the central bank governors, the important representatives from institutions such as the Commission, such as the IMF, such as the ECB, but also equally important to colleagues in our own institution at the EFSF first and later at the ESM, who were not necessarily very senior, but many of them were there basically from one of the first days. We've interviewed some people who were basically secretaries or who were simple officers, but they were around when the office, when Klaus Regling, our managing director, arrived shortly after he was appointed. He was given an office by the European Investment Bank, which happened to be empty, next to the Auchan. And when he arrived, there was nothing but an empty office, and I think there was a telephone standing on the floor. So he had to basically purchase office furniture, get an email address, get a laptop, get the whole organization running. He wasn't the only one then. At that time, the European Investment Bank provided a lot of support, which made it possible for us to, for him especially at that time, to get the operation running. But there was literally nothing when he started. And some of the people that we interviewed were also there when there was, perhaps by that time they had an office desk and a phone, but not much more. So it was important to have these voices, but also the people that you see here and others. We had the finance ministers of all or the deputy finance ministers of all the program countries, Spain, you see Mr. De Guindos here, Cyprus, Greece, Ireland and Portugal, and the finance ministers of important countries such as Germany, for example, or Christine Lagarde, who by the time when we interviewed her had gone on to be the IMF, the managing director of the International Monetary Fund. But what we were interested in was also the time when she was finance minister of France, which was before that. And to our pleasure, and I must also say to our surprise, all of them were ready to talk to us. We were really pleased. In the beginning, we thought, okay, we'll reach out to all of them and probably get a bunch of polite regrets, and then we'll talk to the remaining 10 or 5. But everybody, I don't remember anybody not agreeing to talk to us. There were 2 or 3 who preferred to do written interviews, which was perfectly fine. And everybody else sat down with us. So I had a few colleagues who did the interviews. I talked, for example, to Christine Lagarde and to Wolfgang Schäuble, and also to Timothy Geithner, who is on the next page. They took 1 hour. They went back through their memories and their notebooks, and they told us how it was. And I found that really noteworthy. It also showed that for them, it was something important. They had a certain commitment to the institution. But coming to one point that Charmian made, she said this was, the book was also the history of a consensus. It also showed the variety of points of view that these people had. Perhaps to give one example, if you see Timothy Geithner here, there is one quote in the book. I think it's on page 36 because I looked it up earlier before I came here, where he said that in the beginning, he was the US Treasury of the Secretary of the Treasury in the beginning of the crisis. He said he was really afraid that some Old Testament morality would prevail in dealing with the Euro crisis. I think that shows one point of view. I know he's not a representative of the euro area, but I think he was also talking for some countries of the euro area, whereas you have a number of quotes in the book by the former German finance minister Schäuble, who always insisted on the importance of sticking to agreed rules, to self-imposed rules. So you have, and you cannot say, and that I think was the point that Charmian was making, that one point is more legitimate than the other. You had to reconcile opposing views. It sometimes seemed very difficult, the setup of both institutions, but also then the decision making within the institutions later on the programs, on the disbursement of individual loan tranches, was always involving very controversial discussions within the members of our two governing bodies, the Board of Directors and the Board of Governors, which comprises the finance ministers. But I think the interesting point is that despite these controversies, in the end, they came to a consensus and action was taken, and this action in the end led to keeping together the euro area. So that was perhaps a little bit of a flavor on this part, and I now hand back to Charmian to give you some more on the book.
Yeah, very briefly. I looked through the interviews again to prepare for tonight, and I was extremely struck at the thread that goes through all the interviews, what the common angle that they see in the ESM, originally in Klaus Regling, our managing director, and in the ESM. And the ESM, when it engages in a program, that's a political decision from the sovereign states, also when we make disbursements. But of course, our mandate is to help countries regain access to markets, and we do that through the markets. And the strength of the ESM is widely seen in these interviews as our market expertise. Therefore, that's what we bring to the political stage in Europe to help. And Mario Draghi, looking back, put it most succinctly. He was talking about Klaus at the point. He said he's an experienced policymaker who has a very good knowledge of how markets function. And I think Mario Draghi should know. But what really struck me about it is Klaus mentioned this, our managing director, Klaus, mentioned this again yesterday. We have an all-staff meeting every week, and he said that the mandate that you were kindly talking about, our expanded mandate, is because we are seen as experts in the market, and that we can bring that to the stage. How do you actually achieve these political ends that you want to achieve through the markets and through this expertise? Very good. So a look at the Luxembourg angle, another.
This is, by the way, these are our colleagues. This is a photo that is not most recent. There are a couple more now, but it's the most recent group photo that we have. So we are around 200 people from over 40 different countries. It's perhaps a nice little side effect that we are, legally speaking, not part of the EU treaty framework. So we are an international organization based on an international treaty that has a lot of disadvantages from a legal point of view, because sometimes it's difficult to work together or to work within the EU framework, because sometimes things have to be adapted. But one advantage from our point of view, big advantage, is that we are not bound to limit ourselves to the EU nationals in recruiting. So we have over 40, it varies, so I think at some point it was 43, 44 people from 43, 44 different countries working for us. Countries like the US, Japan, China, Mexico, Kazakhstan, and others. That has very concrete advantages. For example, I talked about, or we both talked about the fact that we are a big issuer. And when we issue our bills and bonds, after the European investors, the Asian investors are the second most important ones, especially China and Japan. And then it is really useful to have people who work within the institution who are perhaps Chinese or Japanese and who speak the language and who know how things work in these countries. But that's a little aside, perhaps also linked to this, because obviously we all live in Luxembourg and have become Luxembourgers in a way. It's, since we speak here in Luxembourg, perhaps interesting to ask, why are we in Luxembourg? We could have also gone to Brussels or to Frankfurt or somewhere else. There is one chapter, actually it comes up in several chapters, but there's one chapter dedicated to this question. I mean, obviously, one very important point, and to answer this question, these three gentlemen are the key people here. Jean-Claude Juncker at the time was not yet Commission President in 2010. He was the Prime Minister of Luxembourg and also the President of the Eurogroup. And he obviously also had in mind his country when he was dealing in the Eurogroup. And when then the question came up, where should this be headquartered? He immediately offered Luxembourg. But there was also a very important substance reason. When the EFSF was set up, Charmian mentioned it was set up as a private company. It turned out then under Luxembourgish law. That was in May 2010. And it was something, if you remember, May 2010 was basically the peak of the crisis, when Greece really started to be in deepest trouble, and when there were, also from hindsight, very well-founded fears about Greece defaulting, the whole situation unraveling, spillover effects to other countries, and a threat to the entire Eurozone. So action was needed within a few days. You could not say we will decide and have a long conference and then perhaps have a solution in 6 months. This needed to be done within a few days. And so it turned out that only Luxembourg had basically the corporate law that allowed to set up a company within such a short amount of time. And then the idea to do this came from a Dutch official at first. But then the location, and that is where the second gentleman in the middle, Georges Heinrich, who was at that time the right-hand man to Jean-Claude Juncker, he was a little bit like what you would call a deputy finance minister, then proposed for Luxembourg to be the host country, because here it was possible to do this within such a short amount of time. And then also quite interesting, it's a nice anecdote in the book. The whole setting up of the ESM had to be done also from a legal point of view, with notary coming and signing. And so you also have the mention and the souvenir of the notary who did the signing. I think his name, if I remember correctly, is Jacques Delvaux, who then made an exception, and instead of having the signature done at his cabinet de notaire, came to the ministry and did this at the ministry, because he said this was a historic occasion. He doesn't set up international institutions every day, and so we'll come to come to the ministry to do that. And the person who then signed was the finance minister at the time, who is Luc Frieden, who is on the right. And so these three people are, in a way, those who are responsible for the fact that we are here in Luxembourg, and I should add, we are here happily. Charmian.
Yeah, I wanted to give you a flavor of what it was like to steer this process, which was chaotic and at times I thought cursed. The original idea was for a much humbler project than actually came out. It emerged at a management board meeting. The board at that time was composed of 4 or 5 people who were there at the very beginning. They were 5 of the original employees. And they said, why don't we all go home, and over the weekend we'll write up a few chapters, and then you can pull it together and we'll have a book. Obviously we did something else in the end. So we went through the interviewing process. That was quite a hectic time for us, and we had them transcribed, and when we got to look at them, we went, oh, whoops. These have been transcribed by machine, and no human has looked at this, and there is a lot of ridiculous material in here. For example, our managing director, Klaus Regling, took on a native spin. He became cloud raining. The banking union became bucket union. And my personal favorite, the qualified majority of member states turned touristy advertisement and became quite enjoying your member state. We hired a ghostwriter to write the story, and he helped conduct the interviews, and I think he delivered 1 or 2 chapters. And then unfortunately he fell ill and wasn't able to continue. He is fine now, but he wasn't able to finish the project with us. So we hired a second author, Rebecca Christie, who became our main author. We hired her, she got pregnant and went on maternity leave before she delivered the first draft. So we hired a third author to cover her maternity leave. And then around June 2018, we had finally a first draft. We did consider around that time having it published by an official publishing house. And we contacted 3 houses that had published a number of books on the crisis, and they were all quite interested. But we decided in the end that this would defeat our purpose. The book would be quite expensive, so we had wanted to get the word out on our narrative, and we wouldn't be able to put it on our website. It would be unavailable, essentially. So we decided against it in the end. For months in advance, my biggest worry about this entire project was having the external quotes approved. It had occurred to me that Wolfgang Schäuble and Christine Lagarde, et cetera, might have better things to do than to review the quotes as we had put them in the book and the book around it. But it turned out to be sort of the easiest part of the process. It was done in like 5 weeks. Everybody was happy. I also thought somebody might say, not only do I not like this quote, I don't like how you put any of these quotes in, I'm pulling out. And then I wouldn't have known what to do, to be honest. But that didn't happen. They were quite happy, and some people, Mr. Trichet concretely thought he had a lot more to say and sent in quite a bit more to help us out. So yes, I really enjoyed working on the book, and I'm really grateful that we did finally get it done. So back to Wolfgang on the impact of the book.
Perhaps just to add one small thing on the publication, we did in the end then decide to go with the publications office,
Yes.
Whose representative is here, Mr. Strohmeier, Director General, and we were very happy with the publications office and the service that we got from it. To continue, for us, obviously, the book has been a very important tool to talk about the ESM and to hopefully also bring the ESM story in a way that is perhaps less, not even less, I would say. It's actually, if you look at it, if you read parts of it, it is a good read. We did a deliberate effort to write it in a way that when people hear institutional publication, I think in the back of their minds often the word boring comes up. And we really wanted to prove the contrary was possible. And thanks to our authors and Charmian's efforts, I think we have managed, but I mean, it's your call to say if we have or not. And we obviously try to tell a story in a compelling way. That delivers a testimony of the history of the institution and the financial crisis. And that's also the reason why we have been using this book in many occasions when we talk about the ESM. It was published when our Board of Governors, so the finance ministers, met last June here in Luxembourg. They meet once a year here in Luxembourg in order to approve our annual report and the financial accounts. That's basically the formal reasons. And at that point, Klaus Regling presented the book to them. And then later, there's also always a big press conference because it happens at the same time as the Eurogroup meeting, the meeting of the 19 Euro finance ministers in Luxembourg, presented it at the press conference. It's then also shipped. It was shipped to the libraries, the important libraries throughout the world. I think Charmian was pleased to find it also at the Bibliothèque Nationale on Avenue John F. Kennedy recently when she was there. And you should be able to find it in major libraries throughout the world. And we did a number of book presentation events in the cities where our partner institutions are located, and also here in Luxembourg, our home country, Mr. Gramegna, Pierre Gramegna, the Luxembourgish finance minister, kindly agreed to come to the event to do the book presentation, which was a big success. And he has always been extremely supportive for the ESM, so it wasn't difficult to convince him to come at all. We've done a similar presentation in Brussels with Vice President Dombrovskis, and next to him you see at that time he was the Director General for ECFIN, Marco Buti, who's also one of the people who were interviewed for the book. You see below Klaus Reging presenting the book to the new IMF Managing Director, Gerva Kristalina. And on the lower right-hand side, you see Klaus Reging giving it to Agustin Carstens, who is the general manager of the Bank of International Settlement in Basel. If you look at the book, I think one thing that is also good and really practical from a reader's perspective, it's 400 pages long, but you don't have to read it from start to end. If you are interested in a particular event, like say you are interested in Ireland or in Greece, or why is the ESM in Luxembourg or any other topic, you have 45, I think, roughly 45 chapters, and you can go to the individual chapters and just read the chapter which are normally between 8 and 10 pages long, and they are basically self-sustained. So you can read them, you don't have to have read the 200 pages that precede that chapter. Also, I think from a user-friendliness point of view, you have, for example, and I think we are a bit proud of that, an exhaustive timeline of the euro crisis at the end, which took us a lot of time to devise. But I think I would challenge you will not find many dates that are related to the euro crisis that are not part of our timeline. So I think it's a tool that is really useful for anybody who is interested in the eurozone crisis, in the creation of the two institutions, the EFSF and the ESM, the rescue funds, and all the related facts. There's also obviously a list of all the interviewers with short bios, and perhaps also worth mentioning, the choice of pictures we think is quite nice, because we've also paid attention not to take the boring institutional pictures, but to have some pictures that are actually quite fun to look at. And I will hand over for a last round to Charmian.
Yeah. Okay, Wolfgang and I are here presenting the book, but I wanted to point out that this was a huge common effort at the ESM, and many of our staff, those who were interviewed and those who fact-checked, put in a lot of time on this book. And a couple of them are here in the audience today, and I wanted to point them out and ask if they wanted to make any comment, invite them to make any comment on the book. So I would mention Alexander, who is an economist, and when the crisis started, he was working at the Dutch finance ministry, so he was privy to the political discussions and also involved in the search for solutions. And one of the people he worked with was quite critical in helping to set up the EFSF. And I would also point out Natalie, who is a lawyer. She fact-checked one of our most sensitive chapters in the book. It was on a German constitutional court case. If the resolution had gone differently than it had, we wouldn't be here today. There would be no ESM. This was a hotly disputed topic in Germany at the time. So she had not only to check the facts, but also the interpretations and the sensibilities in that chapter. So I'd like to invite Alexander perhaps to say a few words, if you like, on your experience.
Thank you very much. Yes, hello, Alexander Ruiter here. I'm also a member of Europa Union Luxemburg, so I'm very happy that we could organize this event together with the European Commission and the ESM. Thank you very much for that. I've been working at the ESM since October 2012, so that's a bit more than 7 years. Before that, I was at the Dutch Finance Ministry. I think one other top tip I would give on the book is that I think at the end there's also a list of cross-references, if I remember well. So there are keywords, and if there's some keywords that you like and that you want to know more about, you can look at that and see find the right page numbers. And the other thing I would highlight about the book is I think it was a great effort, and it's a very nice book. It reads like a thriller, I would say. The other thing I would highlight about the book is that I think it's also a story about people, and you can read throughout the book the people that were involved in the setting up of the EFSF and the ESM. some very senior people, some more junior people, some assistants, some secretaries. I think it's also a book about them and the efforts they have made in overcoming the crisis. And I think it's also, if I can add that in a positive way, it's also in a way an inspiration for many of us to contribute to Europe and to continue building this European project. So thank you very much for this opportunity. Maybe Natalie?
Perhaps.
Hello and good evening, everyone. Thanks, Charmian and Wolfgang, for this interesting presentation of the book. And I'm, as Charmian said, a lawyer. I'm a German qualified lawyer, and I worked for the ESM between 2014 and 2019. Now I'm working at the European Court of Justice. So I was there in the hot phase of the book. I was not there in the hot phase of building up the ESM, of building up the EFSF, which made some fact-checking quite a challenge because not everything was documented very well, and we had to do a lot of research. And interestingly enough, the most challenging parts for me were not the chapter on the German Constitutional Court, which was, of course, a critical part of the setting up of the ESM, but more what Wolfgang mentioned. Making this entertaining is for a lawyer sometimes a bit difficult because a lot of things in law depend on the detail, on the exact language, and so we had to manage quite some discussions and expectations so that it's both legally sound but also still compelling and interesting. So that was a challenge. And the other one was more this Estonian court case, because being a German qualified lawyer, having a degree in French law, doesn't make you the perfect candidate to also summarize Estonian court cases with a view to the ESM treaty. But yeah, we decided we wanted to say something about that too. Unfortunately, we didn't have an Estonian qualified lawyer at the ESM, so your best chance was me. And yeah, the judgment was available in English, which was a good starting point, and then pretty clear. So it was interesting to see that similar legal questions were asked in different member states at the same time, and it's not only the big member states which had this, yeah, well, which had the importance in setting the ESM up. It's really a joint effort, and all member states count, and also all constitutional court cases count. So it was an interesting experience, and I hope you will enjoy the read.
So now I have the pleasure to guide you through the Q&A session. And there's one rule: keep your question short, and because we know that sometimes the answers are much shorter than the questions. And the second thing is, like, you can ask your questions in German, French, or English. So if you're not so comfortable in English, you can ask them in German or French. So any questions? Let's start here.
Thank you. Question regarding hypothetical history. You briefly covered the possibility of 4 countries leaving the euro area, but if you looked at that on a per country basis and focused on the one which seems to have been the largest client of the ESM, that is Greece, and if you eliminated Greece, what would the result have been? Would the implications for the euro have been all that grave if Greece had been eliminated? And on the other hand, there's the criticism that the ESM is all about kicking the can down the road by about 30 years, and eventually there'll be a bill of 200 billion, which Greece will not be able to foot, which will fall onto the European taxpayers. So could you comment on this hypothetical alternative of not having rescued Greece specifically?
Yes, I think in both instances when this was discussed, one is probably 2010 when the euro crisis was blowing up in a dramatic way for the first time, and then the second one was in summer 2015 when we were coming towards the end. We only know that from hindsight, but that was the end of the government Tsipras Varoufakis, just before Prime Minister Tsipras, then without Varoufakis, agreed to an ESM program. These were two points where kicking Greece out or letting Greece go, to formulate it perhaps less aggressively, would have, without doubt, in the first instance in 2010, I think it would have created a situation where spillover effects that were already visible and observable on the markets would have intensified and would have posed a real danger for the entire monetary union. In the case of 2015, perhaps the situation would have been a little bit different, because we had by that time mechanisms in place, amongst others the European Stability Mechanism, but also we were in the process of building up the other tools like banking union and so on, that made the monetary union much more robust than it was in 2010. But you would have created, or you would have altered fundamentally the nature of the currency union. You would have basically gone from the commitment of creating a currency that is irrevocable to a fixed exchange rate system, which would have then most likely been viewed differently by the markets, which probably would have introduced on a permanent level different risk ratings by the markets according to the countries, which in smaller scales does exist also today, but it would have probably increased. And it would have basically demonstrated in a very compelling way to the entire world, and particularly to investors, that the currency union is something temporary that can be, if subject to stress, be revised, individual members abandoned, or perhaps the entire monetary union be dissolved. So I think these were, from not an emotional but a sort of cold analytical point of view, very compelling reasons not to go down that road. And I think this was also the reasons why, in the end, policymakers, and in 2015, it was a decision that was taken deliberately not to do that because of that. There may be other reasons that have to do with the fear that this might have introduced also disintegrational moments into the entire European project. But I think the economic reasons were in both cases very compelling. And your second question?
Debt sustainability.
Oh, debt sustainability, yes. That's a question that comes quite often, and if you look at the face value of the numbers, especially the loans that are outstanding to Greece, I think it's a justified question, but there's a good answer to that. The way that we have designed, you know that the loans that Greece has have an extremely long maturity, around 50 years, with very low interest rates. And the repayment is designed in a way that it's called the gross financing needs of Greece are within a corridor that, according to historic evidence that we have, for example, from IMF loans, and that is historic evidence that passes that spans back to the last 60 or 70 years, with dozens of countries that have lent money from the IMF. If you contain the repayments over a long period of time within a certain corridor that is around 15%, gross financing needs of 15%, then debt is sustainable, and even countries that are vulnerable, that have been under distress, are able to repay these loans. So based not on wishful thinking, but on this historical evidence, we are confident. Obviously, we are not prophets, and I cannot make a promise, but based on this evidence, we are confident that we are getting the loans back from Greece.
It's perhaps worth pointing out that the ESM has been at the forefront of a new way of analyzing debt sustainability, which simply put means you have a stock of debt, but certainly you don't have to pay it off all at the same time. So if you can make the payoffs match with what's incoming, then you have a better chance of debt sustainability, and this is considered a contribution that the ESM has made to the international debate.
Okay, next question.
A very short and general question. Compared to dollar, what is missing to euro?
I mean, the US is a country, and the Eurozone or the Euro area it's not 19 individual countries, but it's not one single country either. So we have decided, and that's a characteristic of the entire European Union, but within the Eurozone, the commitment is particularly strong. We have decided to pool certain parts of what is normally part of national sovereignty within this community of 19 countries, and I'm talking about the currency. So we have this currency. We have, as a result, a common exchange rate and a common monetary policy. But what is different to the United States is that the United States also, I mean, it's a single country, and it also has a unified single fiscal policy and economic policy. This is something we don't have in the Euro area. We have 19 countries that have agreed on a number of rules that govern economic and fiscal policy, but there's no single economic and fiscal policy. So what we are currently doing, and this was what we were referring to earlier in the context of deepening EMU, is that we're not trying to become the United States of Europe. Perhaps this is going to happen in several decades, but it's not for the very foreseeable future. But we are trying to build certain elements that the United States and other single countries have that we don't have so far. One pillar is banking union. So we have now a single supervisor that looks at all the systemically important banks in the Euro area and in the European Union, and which is, I think, becoming quite comparable to the equivalent supervisor that we have in the United States. We have a single resolution fund that can be activated when a cross-national systemically important bank has to be dissolved. There's something similar existing in the United States. And we have discussions ongoing on, we have in a way created a first, still very small budgetary capacity, which can be a very, very small step in direction of more fiscal capacity. We are advocating, but this is not something that is for the time being a consensus view, it's rather very controversial. We as ESM are advocating for creating a macroeconomic stabilization mechanism that would allow for more fiscal intervention in case this is necessary. The way we would design this would be that this would be on a loan basis, so there are no permanent transfers. We have to take into account that this is a very controversial issue. For some countries, having many more transfers is something that is naturally the thing to do, but there are other countries where this would meet a staunch political opposition. In order to circumvent this hurdle, but still gain the economic effect, we would advocate for a fiscal, a macroeconomic shock mechanism that can be designed in a way where it is based on loans that have to be repaid when a crisis is over. So these are the elements that we don't have in Europe. We are working towards, in a way, substitute elements that take into account that we are not a single country, but that would, in a way, substitute and create similar effects that you have in the United States, where it is a single country.
More questions? Yes.
Hello. So I would like to ask whether you work with the countries before they find themselves in dire straits. Do you take in preventive measures? That's my first question. And the second question is that where do you see the future of the ESM? Will it change, or how will it evolve?
So if you look to the past, we haven't worked so much with the countries prior to the crisis, but that in a way is self-evident because we were created as a result of the crisis. So when we were created, the crisis was already happening in the countries, and we were created as a crisis response, but there had not been any time to consult or work with the countries prior to the crisis breaking out. In the context of the reform of the ESM, this is one important aspect that is now going to be added. because part of what the ESM under the reformed ESM treaty will do is to follow the economic developments in all 19 euro area countries together with the European Commission on an ongoing basis in order to better allow the ESM, in case there's a crisis that happens, to have immediately an appropriate answer. If you are not really aware of what is happening, it's difficult to then also very quickly come up with a rescue strategy. So this is going to be part of, once this reform is agreed, part of the reformed ESM. On your question, how will the ESM look in the future? Part of the answer is what I just said. There will be a few more things, like the fact that we are going to be what is called a backstop to the Single Resolution Fund. The Single Resolution Fund will have around 80 billion euros of funds that it will generate from contributions from the banks. The banks basically have to pay the Single Resolution Fund to build up this pot of money. In case of a very big cross-border bank, 80 billion may not be enough. So in such a case, the Single Resolution Fund could get a loan from the ESM on the same amount. So we would basically double the amount of money that the Single Resolution Fund has available to resolve that. That's another important task. Then one of the tasks that Dagmar mentioned in her introduction is that the precautionary credit lines that can be provided before a big crisis breaks out can be better accessed. It's a procedure that currently is a little bit cumbersome. That should be then streamlined, and that's basically it. So we would become, will still stay a rescue fund, but have the ability to perhaps better than is currently the case anticipate crises from happening and be a tool also in the context of other potential crises like banking crisis.
We do currently also have, so before the reform goes into place, we do currently also have a tool to check for possible distress in former program countries. It's called our early warning system, and we go regularly to the countries with the Commission and talk to the central banks and get the data to see how the financial situation is looking. So we do have a check on the program, on the countries we've already worked with.
Yeah.
Are there more questions? Yes.
Hello, it's nearly a personal question, actually. I'm Italian, and following the Italian newspaper, I'm sure you know the issue that the Italian politician raised about the signature of the amendment of the statute of the ESM. So in the newspaper, my understanding, because that's my questions to clear my mind. My understanding was that the Italian politicians don't want to sign the amendment because in order to have the banks, in order to have support from ESM in case of resolution, the country needs to demonstrate that are in order with the Maastricht parameters. So is this true or not? Or maybe you can clarify the reason actually, which is why Italian didn't sign straight away on the amendment of the ESM statute. Thanks.
So in the case of Italy, there was indeed a debate that came up late last year, a little bit before the last Eurogroup in December. That was then followed roughly a week after by a Euro summit. On the agenda of both meetings was the reformed ESM treaty. And then a few weeks before both dates, there was a domestic debate in Italy whether or not Italy should support this and whether or not it was in Italy's interest. I think the reasons that basically then gave birth to this debate were based on misconceptions, because if you look at the ESM treaty and what the starting point for the Italian debate was, that was related to It's a little bit technical. It's the so-called collective action clauses, and whether or not any restructuring of debt would have to be undertaken if a country applied for a program. If you look at that, there have been no changes, and the impression that was created, at least in parts of the Italian domestic debate, that if a country applied for an ESM program, there would be automatic debt restructuring is just plainly wrong. So we were at pains to introduce some sort of calm and factfulness into the debate, which we try to do with the means that we have. We have our Secretary General is Italian, so he went out to speak in the media. He gave interviews to RAI and to ANSA and also to a newspaper, to Il Sole, in which he explained all of this. I think if you look at the facts, there is nothing that supports the fears that were provoked by this debate. But at the time, it wasn't possible. The Italian government at the time felt that it would be difficult to justify in front of the Italian public the agreement. And so what we now have is that this topic is going to come back. As Dagmar mentioned in her introduction, we are looking at March, and then let's see what happens there.
Thank you. One more question. Anybody? Yeah, maybe the last one.
We have several EU member countries that are not very enthusiastic about adopting the euro. But you could argue that some of the functions of the ESM might apply to them as well, such as helping them in case of bank crisis. Is there somehow a way to have both things working together? The non-euro country still getting some help?
No, on this, I think the answer is very clear. We, as ESM, can provide programs to countries who are part of the euro area. So a country that has whatever kind of problem outside of the euro area would have to look for different means. And Dagmar mentioned in the beginning that there are tools like the balance of payment facilities that the Commission has, the internationally available tools like going to the IMF. But in order to be eligible for an ESM program, whatever the specific nature of the program would be, then the conditio sine qua non is being a member of the euro area and by deduction of the ESM. But I wouldn't be as pessimistic as you are. I think it's reasonable to assume that over time, I'm not making any predictions when this is going to happen, but after the departure of the United Kingdom, that eventually all remaining EU countries are quite likely to become also euro member countries.
Okay, thank you. Before I hand over back to Dagmar, first I want to thank Charmian and Wolfgang for taking the time today to inform us about both the book and the ESM, and I think they deserve a big applause for that. And then, as a second point, I want to make you aware, go on our website, the Europa Union website. So this is one format. We have more events to come already on the 4th of February at the Deutsche Bank here in Luxembourg. We have an event with Minister Bosch, the Minister for the Traffic here, and also Katerina Ballet will visit us in March. So look at the website or on Facebook and subscribe. And now I hand over back to Dagmar.
Thank you, Manuel. Let me also thank our dear guests, Charmian, Esther, Wolfgang, Preusel from the European Stability Mechanism, on behalf of the Commission representation in Luxembourg as the host tonight. So thank you, Manuel, for the moderation. Thank you, friends from Europa Union Luxemburg, for the idea, and you audience for being here and having actively engaged. I think we have learned a lot. I have become more curious about ESM, and I will have a couple of questions on you afterwards. But now let me open the reception, to which you are cordially invited. Thank you. Good night.